I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market held tough most of this week despite terrible news on Russia's invasion of the Ukraine and the resulting huge upside move in oil and other commodities. Monday saw a huge decline overnight, 130 points to the downside, as S&P futures saw the West put a big squeeze on Russia, banning key U.S. banks from SWIFT, meaning they really can't do business around the world. SWIFT is the messaging system that about 11,000 financial institutions use as they send messages to each other, letting them know about financial transactions and other transactions through the bank. As a result, Putin put his nuclear force on high alert. But hopes around the first round of talks between Russia and Ukraine brought a full recovery in the stock market on Monday, a wild upside move, and that was until the talks broke down and then shooting intensified and stocks began to fall again. But Tuesday, stocks moved to the downside sharply again as crude soared to $106. That was a $10 gain. And that was on Russia's 40-mile line of military, which closed in on the capital of Ukraine, Kiev. 30-year bonds, they moved up 3 points, and the dollar exploded to the upside in safety bids as more sanctions came online, and the S&P 500 fell 85 points at its lows. Gold and silver also got strong bids as flight to safety bids and the possible shortages in commodities pushed up those metals. Wednesday reversed to the upside again, even with oil up as high as $112.50. Powell's testimony triggered a rally in the markets as investors are certainly waiting for an opportunity to buy cheap stuff. As he testified in front of the House Finance Committee, indicated that only a 25 basis point uptick in rates would come in March, and he used the uncertainties in the world as a smokescreen, and he has been plain out wrong. He kept saying, of course, that inflation was transitory, and they were working hard to get it up over 2%. Of course, now it's 7% plus, and they don't even have a clue what to do, especially in this environment. He thinks inflation peaks in 2022, but his other Fed head, Mester, comes out and says inflation is likely embedded into the system. That makes a lot more sense. Panic in the S&P 500 continues to come on both sides as the S&P 500 moved up 80 points that day. Panic in both directions is really what we're seeing. And bonds, gold, silver, all of them pulled back on Wednesday. Thursday was another upside panic day in oil. It got up to $116.57 overnight. And then all of a sudden it had a huge $10 reversal on talk that there'd be a fast track of the Iran nuke deal. Of course, that would be to get their oil onto the market. Let's just put more money into the hands of the greatest sponsors of terrorism on earth. Remember, we gave them $400 million in cash when Obama was in there. So it seems like one of the stupidest things we could possibly do. I'm sure I'll get comments on that. Stocks tried an upside move early, up about 30 points on Thursday, and then fell hard. Indexes were at resistance, and that brought sellings coming in. But it only ended up about 17 points down on the week for the S&Ps. I'm sorry, on the day. But the Nasdaq and the Russell, they were weaker. I want to note that Bitcoin had a 3-day upside move that was very significant as of Thursday, as it had moved up $8,000. There was talk that Bitcoin could be, well, a replacement for SWIFT. That would be a way that Russia could actually do financial transactions using it. I mean, that is ridiculous. Because Bitcoin is minuscule compared to the worldwide financial market and the transactions that go on in SWIFT. There's over 40,000 transactions a day on SWIFT between those 11,000 institutions. So that's ridiculous. Of course, you could use Bitcoin to move money around, and with Russian money locked up, there might have been some oligarchs that were trying to do that. But that whole concept is ridiculous. And we saw Bitcoin move down again after that. Now, after having traded up to 45,000, now back down, getting close to 40,000. So Bitcoin just is an instrument in cryptocurrencies that are fad investing. And with the world as it is right now, I would think that the cryptocurrency panic and washout is going to come this year. Friday, there was a huge move overnight in the stock market and other markets, as there was a report that Ukraine's largest nuclear plant, in fact, the largest in Europe, got bombed and was on fire. And we saw the S&P 500 fall very quickly, 70 points. And then it recovered some, but it was really weak here all day. And the good news is that the bombing did not actually hit the nuclear plant, and the fire was next to it, so there was no release of any contamination. So that, I guess, is a little piece of good news in all of this horrible news. Oil popped again, however, getting over 112, sitting now at about 111.5 as I'm doing this video at midday. But it's not only the oil markets. Wheat, its third limit day, up 75 cents. We still don't even know where this thing is going to cap out. So not only, of course, is there energy inflation, but there's food inflation on fear of shortages, as the wheat market now trades over $12 a bushel. That is absolutely incredible. Safe haven bids came in on Friday also, as the dollar, which has been soaring, moved up again to highs we have not seen since May 2020. The strong employment numbers which came out just don't really seem to matter, because in a world like this, who really cares about what happened last month or the month before? And then, of course, more sanctions are coming out, with a lot of different companies getting behind this, and Microsoft halted all business with Russia today. And then there's a response. It's a tit for tat, horrible tit for tat, as Russia comes out and says, well, they will no longer be shipping fertilizer out to the West, and they're the biggest, them and Ukraine were some of the biggest exporters of fertilizer. And of course, that's what's affecting the grain markets, because if you can't fertilize it, there's going to be less of it. That lower supply makes higher prices, and it's just one side of the world trying to squeeze the other. So after 48 years of trading and analyzed markets that I have done, I'm still amazed by how the background news often fits into the analysis. We have been projecting that stocks move down into March and April, and that this would be a bear market year. Now, this horrible news from Russia and Ukraine conveniently fits into our analysis. I have to believe the markets would have fallen anyway, because there were a lot of factors, of course. Number one being the Fed getting into a tightening period, and that really isn't going away. The Fed will be trying to normalize despite what's going on, though they may not have 5 increases this year. And this war is not ending fast. Putin wants the Ukraine, and he's going to take over the whole country. And then we're looking at an insurgency. So the war will go from this horrible scorched earth movement that's going on by Russia to a war that goes on inside of the country, as the Ukrainians, who fight very hard, will be fighting back. And sanctions, well, they may be here for years. China is backing them. they would not get in the way. They knew about what was going on in advance. And of course, this is their opportunity to see how the West reacts as they get ready to move in and take over Taiwan. Of course, it certainly appears that if you have nukes, you can do anything you want. So the West is afraid to tangle with Russia and certainly China, and there may be nothing to stop them. And what it looks like, I think this is highly likely, is that the East and West will be facing off, and a new Cold War is at our footsteps. That's really bad for the stock market and the economy. And there's a rally coming after the low that we're looking for in this March-April period, which I will show you at the end of the show. But for a very long period, expect the stock market, to have poor returns. We showed examples of that some weeks ago, and we strongly believe that we're entering a period right now like that. The majority of people want to buy. I actually ran a poll on Twitter, and some 55% of them either want to buy now or are looking for a little deeper low to buy. And the markets will rally, as I'm saying. There will be relief. They will fall into a trap. Will you? For the week, the stock market major indexes down about 2.5% right now, all of them. Bonds, the 30 years explode to the upside. That whole Treasury sector moves up very sharply. 30 years up 5 points. More than that now. That is amazing. The 10-year yields dropped 28 basis points for the week. They're trading now about 1.70. We had targeted them up over 1.8 and then up to over 2. They met our targets, and if you see our analysis on FutureSpeak, then you will see how we do analysis on actually 25 different commodities, futures contracts, ETFs in the commodity world. And you're going to be able to see that for free. I'll tell you how in a few minutes. Gold explodes $70 to the upside. Now, we have been upgrading this and talking about the fact that we thought there was one more move to the downside into the springtime. Over 2,000, and we're going to be raising those targets again, and the conditions will be much better. Thing is that when you get into liquidation stages in the stock market, then often the silver and gold markets, the metals markets, they do poorly. When we get into a point where there's a flight to cash, there's a flight everywhere. So there is likely to be some risk out there in gold and silver. Our favorite, what we talked about in the last couple of weeks, was copper. And copper is soaring. 42 cents for the week. That's up over 8% for the week in copper. And that breakout is here and just beginning. Dollar, well, that's up over 2% for the week as that safety bid comes in. And it's on the collapse of the euro. Now, remember that the euro is 57% of the dollar index, and that Eurozone has a lot more risk right now economically than the U.S., especially on the energy squeeze. Talk about a squeeze. Oil up $20 on the week right now. Panic over the supply issues as the high came at $116.57 a barrel. Wow. The next level on our charts is around 120, and that may be pretty easy to hit depending on what's going on. The huge volatility we're seeing right now is likely to stay in that light crude market. Coming up in this show, we have some great stuff. Arvi is going to bring you a preview of our stock sectors, and he's going to help you look at swing trades, how to set those up and how to plan for them. I'm going to bring you a special segment on a group that I looked at because I've gotten a lot of questions about what do you do now, and this is really on crisis investing. How do you find the group? And then we're going to give you a look at our popular services preview, our once-a-year look at the favorite content of all of our members, and you're going to be able to see that for free. So get ready to sign up for that. You're not going to want to scroll forward on that one if you're watching right now, because you want to see what you're going to get for free and how to get it. Stock market, well, I'm going to look at that as I look at the SPY for the short term and intermediate term. And we're going to look at momentum and cycle analysis and forecast out both in price and time, which is something that we do and almost no other analysts do. All right, so I want to remind you, please go to the askSlim site and explore that site that's there. Look on the top of the main page. You're going to see how to get stuff for free. If you're new, you can sign up for our PSP, become a free member. If you're watching this on YouTube, please do subscribe to our channel. We put a lot of videos out there now. And click the notification bell and like this video by giving it a thumbs up. If you click that notification bell, it'll let you know when we put up videos. On Twitter, follow us at askSlim. And for questions about our memberships, huge offerings of education and analysis, or anything about our new popular services preview that is free, write to Matt at askSlim.com. This is a preview of stock sectors. The way that we do analysis, our analytical style, has three very important components as we do cycle analysis, momentum analysis, and support resistance projection type analysis. So those are the three major components, and that's where our trade setups come from. This video, which is for level 2, 3, and 4 members, is a video that will show you how we do that in a lot of stocks that RV looks at. This one is going to look at Goldman Sachs, and RV does a great job on this. So watch this preview of stock sectors, short-term swing trade planning. I hope you like that video. RV does a fantastic job on that. And please do consider becoming a member so that you can get benefit from all this type of analysis. All right, crisis investing. Well, this certainly is a time of crisis. And I get a lot of questions about, where do I put money now? Is there anywhere to invest with stocks so weak and at risk? And commodities already at high prices. So what do you do with your money? Of course, I always say that it may be better in these cases to have cash and to be able to think clearly. But if you do have and you want to be in a place where you are investing some money, then what would be the place to do that? So I looked at many of the groups and subgroups in our stocks. Our stock list we call it our group universe, which anybody can upload if you're a level 4 member for the Thinkorswim platform. Thinkorswim is our preferred broker. You can sign up and open an account for Thinkorswim right on the front page of our website. So if you are interested in where could you put your money now, do watch the rest of this video. So in the process of looking for these groups, looking through the groups, I really was looking for what would benefit, what could go up in this environment, and maybe even be investable for the longer term. Well, this Russia-Ukraine situation, well, it's not going away fast. And Russian oil, well, there's really no bids for it right now, of course, other than their favorite other autocracies, which would be, China and North Korea. So there's not a lot of places that are buying Russian oil right now, and that is putting a squeeze. Russia and Putin, well, they're probably going to be unacceptable going forward for a long time. Nobody's going to want to have Putin at their dinner table. The likelihood of what we're seeing right now in these energy markets and the higher inflation and all of that, the higher energy costs, that actually could be with us now for years. And this, when I looked at that, I said, well, it makes sense that alternative energies would be the right place to be in. Because if there's any time when it makes sense, it would be now. So I looked at the cycle analysis in this group and many other groups, and this one just lined up really well. So I'm going to show you a grid right now. And if you're a level 4 or 4 plus member, you can request this grid from us, and we will send that for you for the Thinkorswim platform. But this is the analysis of that group that I think is really important. So what you're looking at now is the solar stocks, alternative energies, of course, and TAN, T-A-N, as you see here, which RV recently talked about in Trade Idea, is the ETF for the group. And then you have CSIQ, FSLR, that's First Solar, Canadian Solar, SunPower, SPWR, Solar Edge, which is SEDG, and Phase, which is ENPH, Jinx Solar, JKS, and Sunrun, which is also now combined with Vivint, if that's one of the stocks that you followed in the past. I'm going to go right in here and I'm going to maximize this cell and show you TAN. And this is important analysis because it really gives me an opportunity to show you cycle analysis. In other words, the rhythm or the heartbeat in the market. Cycle analysis gives you the way to see what the rhythms are. This is a drawing tool called Cycle Brackets, in case you're new to this, and this just helps us get an idea of the rhythms in the market. You can see that there was an important low here and here and here. This was a tough one to read, as we call that a left-hand First it was a right-hand translation where the peak was on the right side, and then a left-hand translation right in here. When you get that type of a setup, once it breaks underneath the cycle low, it sets up a breakdown, and then you have good negative information, and then it's likely to decline through this whole time frame right over here. I'm going to grab a cycle line tool right here and give you an idea of where those cycle bottoms are. The bottom is the cycle bracket, which is the ideal cycle, as if it went up and then went down in an equal amount of time. Of course, we get information from how it goes up and down, how long the rally lasts, and how long the sell-off should last. So you can see here that if I go back way over here, there was a low, an actual low right here. And I'm going to put that on the chart and right over here. Now, it does not have to line up perfectly. It never does because of the principle of variance. So I'm going to where the lows actually occurred. And you can see that there was a low due somewhere right over here, somewhere between this time frame and this time frame. So I'm putting in a range in there. And look what happened right in there. The low came. So this gives you an indication that it is likely that for quite a number of weeks, as we're looking at a weekly chart in here, there's going to be a rally in the solar stocks. Now, I'm contending that this environment may end up to be one that sets up these stocks for big upside moves and for a longer period of time. That would mean that you'd have to get a rally up. It would then probably hit resistance and move back down, but not get this low and set up a bigger rally further out there for a longer time frame. So you can see it came down here, hit that major 61.8% support, and then began this rally. I believe this rally is just starting, and that says that solar stocks are going to do quite well. So remember this cycle bracket that we have right here on the bottom, because now on the other 7 stocks I'm going to show you, I have overlaid that. So you can see how the market rhythm, the ETF rhythm from the group, aligns with the actual stocks. So this looks very clearly to me that this is the beginning of an upward phase, and there is a favorable period here on the intermediate term, and this might actually turn into a much longer term favorable period. But right now, that looks really good. So I'm going to go back and I'm going to put this out again, and this is the whole grid. And then what I can do is there are arrows up on the top, so when I make TAN bigger, I just scroll to the right and it brings up the next one. So this is CSIQ. Again, you can see that the tan color right in here is TAN, and it aligns so well with CSIQ. The bottom came right in here. It was actually a test of that low that didn't quite get as low. That happens in bullish conditions, and then pop to the upside. With the stock market getting weak right now, these are pulling back down, but this really looks like an upside move coming. Resistances are right up over here right now, 33.5, 35.60, and this is a likely target much more up around 40. So I could see this stock gaining 1/3, 30% in here is fairly reasonable, right up to that major 38.2% fib. That's pretty much in line with where the 78.6 is on this cycle. So I think 40 is a reasonable upside target. If it got underneath this low right over here around 25, well, that would be a warning to you that the whole idea of this bullish period is gone. So we want to always have that kind of reevaluation level, and that's around $25 on this stock. So I'm going to move a little quicker through these. You can see right over here, First Solar, the cyclical alignments that you see in there. And there's a older cycle right in there, a bigger one we were looking at, and a revision, which is that blue line that that lines much more with in line with TAN, the group ETF, and the bottom just forming in here. In that larger, older cycle, the new cycle right here, and TAN, all aligning for lows right over here, and that points to an upside move. There was a similar period like right over here, and you could see the big upward move. I think upside minimum in here is 85 in First Solar, looking at this pattern. The next one right in here that we'll look at, you can see, is SunPower. It really had a major big downside move. Now, what's important to look at in here, and I haven't mentioned momentum before, but see where momentum turned down right over here. This is the Reversal Scout. Reversal Scout is a proprietary indicator available to Level 4 members for Thinkorswim platform. You need to get that from us by becoming a Level 4 or 4 Plus member. And you can see in here it's beginning to turn upward as momentum is beginning to improve. So that's really an important aspect of this analysis. Again, we're looking for 22 to 24 in here, which would be quite a good upside move in SunPower. The next one we'll look at, and you can see that this one has really already exploded. You can see the alignment with the group, TAN right over there, and look what happened right over here. Remember, momentum turns down here, you get the downward warning, the cycle declines down to this level, and then it gives you that test right over there where that low occurred, and then explodes to the upside. This one could easily make 350. This is one of the real strong earners in here. Look at these earning projections. Most of the solar stocks don't look that good. This has a forward PE of over 60, which is pretty high. But still, we've seen when these groups become in favor, they get pretty high PEs. So this one looks really good in here. This downward pullback in here looks like an opportunity to me. The next one is Enphase. You can see the bottoming coming right in there. Upward projection to around 200. The lower projection is around 178, so it's 155 right now. And again, this is a good earning stock right here with a forward PE of around 50. And this is Jinx Solar blasting off from that important low. You can see that cycle pattern right there. Note how well the Reversal Scout helps you with as you get these momentum changes at cycle lows and cycle peaks, and cycle low, cycle peak, down to this timing, a hammer bottom, and exploding to the upside, reasonable price level. Up here at $54 to $60 in JKS. And here you could see the bottoming coming in Sunrun. It's actually not looking as strong as the rest of the group. Right now, 34 is an upward projection that is lowest projection, pretty reasonable, trying to get the momentum upturn, but not really able to. Look at the value of that Reversal Scout as it really tells you the conditions. And that's really important if you are an analyst to have a momentum indicator that you think is valuable and gives you the important information. That's a look at the 7 stocks and the ETF TAN, and you can see why this really looks like a group. that has opportunity right now. And it also fits into the whole discussion of the crisis in the world and energy prices going up and probably not going to come down for a long period of time. Remember, when I show you this, I'm sharing our analytical style. This is not advice giving, and we want to make sure that you apply the information that we give you for education to your own style of analysis. Make sure your risks are appropriate and fit into how you engage in the markets. That's this segment on crisis investing, and I hope you found that very valuable. Coming up, I'm going to show you the stock market analysis, but first, do not scroll. We're going to give away free stuff right now. Free access to askSlim content and services. It's our most popular services preview that we only do once a year. This is the askSlim Premium Services Preview, and it runs 3/7 through 3/25. It's a little over 2 weeks. What are you going to get? Well, remember, this is only once a year that we do this, so it's really important if you want to get a sense for our analysis. You're going to get our stock index report daily snapshot. That's the indexes, the S&P 500, the NASDAQ, and the Russell, with technical insights, looking at 2-hour charts, daily charts, weekly custom charts. We give you the key levels and the askSlim momentum indicators, all in that report. That's daily. You'll get our intraday live chart stream with the stock indexes on there on 15-minute charts with key support and resistance levels, anticipated breakouts and breakdowns, and the acceleration zones. These are zones where there are essentially gaps where it is likely that there is going to be movement in some extreme. You get the S&P 500 multiple time frame grid, which looks at weekly, daily, 2-hour, and 15-minute with our proprietary indicators on there. That's live, and you're going to get that for the S&P 500 only. We do that on 11 different live grids. And you will get our daily trade ideas, favorable entry ranges, projected target zones, and suggested reevaluation levels. And there's more. You're going to get, in this once-a-year preview, that's free, Slimulator ranking system. This is an amazing app with our cycle and momentum analysis for 84 of the best traded stocks, ETFs, and futures. You're going to get our momentum tracker, and that's fantastic. You get a clear picture of momentum on over 1,000 stocks and ETFs available to review in multiple time frames. Longer term holders are absolutely going to love this. So if you're more an investor or position trader, this one's for you. You're going to get the video that I do every single Wednesday. So you're going to get videos. You're going to get 2 of these if you sign up right now of Future Speak. I do analysis of 24 different futures, contracts, short, intermediate term outlooks for the S&P 500, the Russell, the energies, precious metals, Forex, bonds, Bitcoin, grain, softs. I do all of those. I do about 50 charts in about an hour and 10 minutes. It's an amazing video. It is our most popular member video. And you're going to be able to participate in our beta of our new cycle low timing service. It's finding and timing the next key lows, and that's no easy task. And with the askSlim cycle low timing service, we increase your odds of being able to identify those key windows of favorable risk and reward. Favorable reward and the risk. And this launches on March 9th. So if you sign up right now, you'll be in that beta program. This is amazing. All of what I just told you for free. We only do it once a year. If you sign up now, you're going to get it for over 2 weeks. You don't have to have a credit card, and you're just going to get all of this. So write to Matt at askSlim.com if you have any questions, or go to the top of our main page, click that free sign up button, and sign up for it. You will be a Popular Services Preview member and be able to get all of this information, no cost to you, and really, I know, going to be very beneficial. Here is the stock market analysis. We're going to look at the SPY. We're We're going to do the cycle and momentum analysis, and we're going to try to target the low in price and time, something that we do in our analysis that most of the other analysts out there don't do. Most analysts are looking only as price targets, but our analysis gives us time targets also, and I think you're going to find it very interesting. So here is a look at the S&P 500 SPY on the daily chart. And this is cycle analysis. And you can see on there are actually 3 different cycles that we're looking at here on the bottom. And these are all coming down into a low timing right over here. Now, that had us believing that this panic low right over there would be tested out into this time frame right here. Market is very resilient under these conditions, and it might not get quite that low in this downward move. These cycle troughs time out right in here to a period of early March to late April right there. And the timing expected between these 2 lines right there time-wise, and that gives you a low sometime around late next week, sometime around March 10th, March 11th, something like that. And then this one way out into late April. So we would expect that we would see a downside market right in here into the next week. If it does turn out to be stronger, it will shift this a little bit and change the timing or so, and then this will have been the key low. So we'll be watching for that. And I have said in our videos to our members this week that it really looks like there are people trying to buy the market right now. It has been very resilient in the face of this news. So the greatest expectation is that this would then come down for sometime into next week. Does not have to get quite that low, and then another rally period out over here with a lot of risk as these come down into the late April period. So we would believe that any rally in the upside would be fake. These resistances right over here that you see are around 437 up to about 446, and this rally out over here could certainly get out into those levels again before hitting a period where there is much more downside risk. So we'd be looking for quite a fluctuating market in here, decline, rally, and then decline, with this low a high probability of being taken out way back over, way out over into late April. That's about 5 weeks from now. When I switch this over to the daily chart, now before I do that, I want to make an important point that momentum in here is negative, and this is the slim ribbon, which is available to everybody for free to use on the Thinkorswim platform. You have to download it from our site if you are a Thinkorswim member. If you're not a Thinkorswim member, it is our preferred broker, so we encourage you to open up an account through our website at the front page. See this downward arrow on the slim ribbon PO? This is a warning of a downward resumption in momentum. You could see you got those right over here, and then of course you had that big decline. When momentum signals are strong, when this is green, then you get advances. So right now this is a period where momentum is negative. Now when you have multiple downward momentum conditions, then you get into a period where there could be a big decline. Here you could see the momentum on the reversal scout here on the weekly chart is pointing to the downside. That's that low I showed you on the daily chart. That was with a trough of about 14.4% on the downside, but it's a low probability that that is the final trough. We're looking for, now these are the minor cycles that I just showed you right in here. This is the really big cycle right there, the intermediate cycles right in here that you can see the cycle rhythms, and then the smaller ones inside in here from the daily chart, and now we're in this period where it's turning down. So either it comes down right in here into this March period that I'm talking about in the next week or week and a half, or this one way out over here into late April. But this is still a period of a lot of risk here in the market, and we would expect that upside attempts will come, but they will be met with selling, and you will see downside movement. Now, if you look a little further out, you can see these cycles out over here into May, into June, July. This is really a period where we think that the market will try to do better. And we call that period of upside rebound a false rebound. Now, in past bear markets, and we think this is a bear market, this could come all the way up 2/3 or 3/4 of the way up to the high. Some markets even test the highs, with some indexes not getting there, and you get a divergence when that happens. Certainly doubt that that's going to happen based on valuations, but there is a period out over here in the spring and early summer when the market should look better. That means that in some panic selling in here when it comes, that will likely be an opportunity for intermediate term holders to be a buyer, maybe even investors, but you're going to have to gut out some maybe long-term really negative periods. If you watch the beginning of the show, I talk about a long period of a lot of risk in the stock market ahead. It could be years. So I caution investors at that point and earlier in the show that it may not be the wisest thing, and maybe the wisest thing is to raise cash out into this period over here. So right now, again, we're looking at momentum being negative right over here on the weekly chart. The time frame still pointing to the downside, potential for hitting this 38%, which would be a 20% decline in the stock market. And then on the daily chart, momentum negative. Also, when I show you the side-by-side in here, you will see that what that gives you is negative momentum here on the weekly, negative momentum here on the daily, and periods when you get that are the highest downside risk. The slim ribbon PO on the bottom giving you that negative signal. And all of this is suggestive that the highest risks are still to the downside for the stock market. I really want to encourage you to go to our website and make sure that you take advantage of our popular services preview. That is, you'll be able to see what we bring in huge amount of content. And if you scroll forward and you haven't seen that, go back, because we're going to give you 2 weeks of an amazing amount of content with no credit card necessary and no cost. So please do become a popular services preview member. You can just go to the front of the website and click on that and sign up, and you'll get 2 weeks of a huge amount of our information at no cost. If you're on YouTube, please do subscribe to this channel and click the bell to get notification. And do give us a thumbs up because you love this video and love our work, and that does help us. And watch the member videos and the playlists also. On Twitter, follow us at askSlim. And for questions on anything I've shown you in here and about our huge offerings of education and analysis, write Matt at askSlim.com. That's everything I'm going to show you today. I hope you've been unbelievably well informed, and this benefits you a lot. I want you to be so careful because it is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to the city and I'm gonna do a city show. And I know all my fans wanna learn how to make some dough. I've been